Hey guys, it's Chris from The Hidden Reserve, and in today's video I'm going to be going over the 4 different ways that Christian business owners can stop losing money to the banks. And we're just going to dive right into things. So the first thing is stop relying just on bank loans. You need to be aware that there's other alternative financing methods out there. You don't have to just go through a bank to obtain financing. For example, if you're a business owner and you need a new piece of machinery, let's say it costs $50,000, most times if you don't have the cash on hand, you're gonna have to go to a bank and see if you qualify for a $50,000 loan, and there's the possibility that you don't qualify for the loan, you're not able to get the funding to purchase the machine. The other thing you have to be aware of is if you do get that loan, you're not in control of any of the terms on that loan. They're gonna set the interest rate and they're gonna set the repayment schedule on that loan. There's another way out there where you can do the same thing where, okay, I need a piece of machinery in this example for $50,000, but instead of going to a bank to obtain the financing, you can create your own private contract with an insurance carrier and use that instead. And basically how that works is you have to fund your contract over time. Once you build up enough cash in your contract, what you can do is, instead of going to the bank, you can go to the insurance carrier that your contract's with and request a loan from them using your cash value or your cash in your contract as collateral. So to give you an example, if you have $100,000 built up in your contract over time and you need to purchase this $50,000 piece of equipment, what you can do is you can go to the insurance carrier and say, hey, I want a $50,000 loan against my $100,000, and I want to be able, you don't have to tell them what you're going to use it for. And once you get that, you make that loan request, they don't ask you any questions on what you're using the money for. There's no credit check, and there's not going to be a loan repayment schedule on that. So they'll wire you the money usually in 3 to 5 business days, and once you get that money, you can decide how you want to repay that back to the insurance carrier. Now there's going to be interest on that loan. That's very important to be aware of, but there's no constraint on how you go about repaying that to the insurance carrier. You can decide, hey, I want to repay back this $50,000 loan over 5 years, 10 years. Doesn't matter how you go about structuring that. So in summary with this is you don't have to just rely on a bank to get financing. There's other ways to go about that may be more advantageous for you as a business owner. So that's number 1. Number 2 is the interest that you're earning in your bank account. If you're in a traditional checking or savings account, you're not really earning anything at all. You're probably earning maybe 1%, 0.01% at best. And you have to know that there's other accounts out there that give you, and I'm not talking about a high yield savings account, there's other accounts out there that give you a much higher return than a bank account. Like these private contracts we're talking about, you can get anywhere from 3 to 4, maybe 5%, depending on the carrier that you're with. But the thing is with this, once you have your private contract in place, there's a guaranteed interest rate that you get. So for example, if you're getting, with the bank account, you're getting 1%, let's say, that's not guaranteed to be 1%. It could go up, and it could also go down. So there's no certainty around what is this interest rate going to be on my funds parked in this bank account. Now with these private contracts, you'll have that guaranteed rate, and that does not change throughout the life of the contract. So you might have a guaranteed rate of 3%, and that's not going to change at all. So you at least know, okay, I'm going to earn on a guaranteed basis 3% on my money if I park it or reposition it here. And you still have the same liquidity. You have liquidity just like the bank account. It is a bit slower, but it's very similar. Like with a bank account, you can go there immediately and get access to your money. With the private contract, there's an extra step of you have to request a loan or withdraw to actually get the funds, and that can take anywhere from 3 to 5 business days. So you still have liquidity. It is a bit slower than accessing money you have in a bank account. But the thing you have to realize is the interest that you're earning on that money is a lot higher in most cases than a traditional bank account. The last thing too I wanted to add for the bank versus the private contract is your money is creditor protected in most states with these private contracts. So if someone were to sue you, then your funds in this private contract are protected, unlike a bank account. So that's a really big thing for you business owners out there to just be aware of, okay? Okay, point number 3 is earn money in 2 different spots, not just one. So what I mean by this is with a bank account or going through a bank for financing, when you request a loan, you have to pay that loan balance back and you have to pay interest on the loan to the bank, okay? Now with a private contract, the difference when it comes to financing is you have cash that's inside of your policy, inside of your contract, and that's going to be earning a guaranteed interest rate on it. And with most carriers, at least the ones that I work with, the mutual carriers, you're going to get a dividend paid on top of the guaranteed interest rate as well. So you're earning money inside of that contract, and when you go to request a loan from the carrier to buy, let's say, a $50,000 piece of equipment, like we talked about earlier, the funds that are inside of your contract, you're still going to be earning interest and dividends in most cases on the full bucket of money. And I'm going to really simplify this and break it down. If you have $100,000 inside of your private contract, and let's say you're earning 4% on that money, if you need $50,000 to go purchase this piece of equipment, you request a loan from the carrier, they're going to give you the $50,000. Meanwhile, you're still earning 4%, you're still earning interest on your full $100,000 inside of your contract. So it's as if you never touched the money, yet now you have a loan, you've got $50,000 that you can use to purchase the piece of equipment or whatever it is you're using or you're trying to finance. So you're earning money inside of your policy, inside of your contract, and simultaneously you have the funds to go hopefully purchase something or invest in something that's going to yield you a return, even though you don't have to do that. But that's most commonly how this is used. So that's something very powerful to realize is you're earning money, the money that you put in there, you're always going to be earning interest on it as long as that contract's in force. Comparing to a traditional way of going about financing is you go to the bank and you get that loan, it's like that money, that interest and that money's gone forever. You mean you're paying it back. Yes, you have the piece of equipment or whatever you purchased, but those dollars are gone. That interest you were paying went to someone else's system opposed to yours. And the last point I want to make on this is with your contract, that money in there too it's always going, like I touched on, it's always going to be growing because you have that guaranteed rate of return. So that's just something very important to be aware of. Again, you have the ability to earn interest on the same dollar twice in a safe, guaranteed growth environment, okay? And then the fourth thing that I want to touch on is the legacy component. So if you have money in your bank account and you pass away, yes, that money goes to your kids or your beneficiaries, whoever you're leaving it to, but it's not as efficient as it could be. And what I mean by that is with a private contract, you have a death benefit attached to it, and that death benefit is paid out income tax free and it avoids probate court. And that's a huge, huge thing. Not sure if you've ever gone through that yourself or you know someone who's gone through it, but it's not a fun process at all. And then the tax piece, the money in the bank account is going to be taxed to your heirs. So that's a huge, huge component because who knows where tax rates are going to be in the future. They could be higher, they could be lower, but it's a gamble either way. We don't know. None of us have a crystal ball on what the tax rates are going to be, and we also don't know when we're going to pass away. But with the private contract, you at least know, hey, this benefit, I know what benefit's going to be paid out at a certain age. Obviously, we don't know when we're going to pass away, but you know that whatever that benefit is, your family, your church, whoever you're leaving the money to, most likely the bulk of it to your family, they're going to get all of it. and there's not going to be any income tax on it. Now, I have to put an asterisk here. There might be estate taxes on it depending on your situation. That's a whole, I'm not going to get into that for this video. It's a whole different discussion, but it's just a very tax efficient and seamless way to transfer wealth without all of these other hoops and hurdles that you have to put your family through so that they can get those funds. And the other thing I'll say about the legacy piece is, obviously with a bank account, whatever money you've built up in there, that's all the money that's going to be passed down to your kids, your heirs, whoever you're leaving it to, minus the taxes, and there's no death benefit. With these private contracts, the way it works is you build up a cash value over time, savings if you want to look at it like that, and you also have a death benefit. Now, when you pass away, and this is a very, very important thing to know, when you pass away, the cash value blossoms into the death benefit. Okay, so there's not two different piles of money, if you will, that are paid to your family or whoever you're leaving the money to. So if you had, for example, $500,000 built up in your cash value and you had $1 million death benefit, your family doesn't get a $500,000 check representing the cash value and then another $1 million check representing the death benefit. The $500,000 is going to be baked in or blossom into that $1 million death benefit. And I can break down, this is a whole nother video in itself, but the easiest way to explain it to you guys is, think of a home. So you bought a home for $500,000. And let's say when you went to sell it, the fair market or the value of it was $1 million, and we're assuming you have no debt on it, okay? So you bought it for $500,000. You sold it for $1 million. How much money do you get in that sale? Do you get the $1 million that you sold it for, or do you get the $500,000 plus the $1 million, the equity that you had in that property? No, you don't get the equity and the price that you sold the home for. It doesn't make any sense at all. It basically the equity blossomed into the sale price of the home. And that's the easiest way I can explain how it works for a private contract. You don't get both the equity, which is your cash value in your policy, and the death benefit separately. It's combined together, if that makes sense. And that's the easiest way I can explain that. So those are the 4 different ways that Christian business owners can stop losing money to banks. Okay, there's 4 ways that I covered in this video. There's other ways too. I'll make another video on it, but those are the 4 main things that I've seen. And one of the biggest things I want to reiterate is the financing piece to all of this. All of us have to finance stuff one way or another, whether it's paying cash, borrowing money, and just know that there's other ways, like we discussed in this video, that are more effective for financing. So if this video you found it helpful, please comment on the video, like it, share, subscribe if you haven't already. If you do have any questions for me about any of this, comment below, reach out to me through Instagram, that's the best way, or you can email me. I'll have all that in the description below. If you do want to book a call with me to learn more about how to implement any of the things we discussed today, I'll have the link in the description of the video. There's going to be a link to my calendar. If you don't see a day or time that works for you there, just send me a message and we'll find something that works for the both of us. So I hope you enjoyed the video. Hope you got some value from today, and I will catch you in the next one.